Okay, this is my first video in English to try to show some knowledge in stock markets. Hope you like. Please receive my apologies if my level of English or fluency is not so good as you want, but I will improve. Okay, if you were a beginner and you see this plot, you will have the intuitive thought that the euro dollar is very cheap because we have a path, a downward path, and the cross, I think I can say the cross in the euro dollar is near lows. Okay, this is a good thought, but it's not the best thought or analysis you can do. Okay, let me check. If we plot 6 months ago, you see that the vision, the overview is very different because here you have an upward trend, a minimum correction, and you will have the easy thought to say, oh, we have an upward trend, so I will buy because this is only a little correction, and we will have sure a pullback. Okay, of course, if something is in minimums, it's not necessary it is cheap, and of course, if something is in maximum, it is not necessary it is expensive. So this is the first idea. If we now make a plot in 1 year or year to date, not year to date, the last 1 year, we have an V evolution, and you can see in this case, looking about the path, the movement of the stock, or in this case, the cross, the foreign rate, we see that you don't have a clear idea on what will pass in the future because the trend is not clear. Okay, we have a flat movement because we have here a panic, but then we observe a pullback. Okay, let's check if we get the plot in 10 years. Here you can appreciate again a different view because if you have this horizon, temporal horizon, we have a downward trend in the year 214. We have the 1.4, and now we are in 1.06. So if you look at that medium long term, you will take the vision that the euro is cheap, and you will be tempted to buy. But again, not always the price reflects the value of an asset. Okay, when we start to learn about markets and in general economics, and if you want to know something about the future evolution of stock markets or any asset underlying, like the foreign exchange in the Euro USD, you need to analyze the value and also the price. Okay, not always only a fool thinks that the value is the same of price. Okay, please forget it. And how can we manage or study value? Using macroeconomic theory, economical theory in general, and fundamentals. The fundamental analysis, not fundamentalist. Vale. And okay, on the contrary, we have the path of the price and we can make technical analysis or statistics. And for me, the preferred analysis is the quantitative analysis that can mix also the statistical analysis with some technical analysis uh, and mix with the fundamentals or fundamental analysis and economical theories. Okay, in the case of the foreign exchange, we saw that the Euro USD have a downward trend in prices in the last 10 years. Okay, why should we see this actual price? Because we have that difference between interest rates. The rates in USA are bigger than the rates in the Europe. Okay, and what we are seeing in the markets is that the Fisher theory, I think Fisher was writing that way, Fisher theory is working, but not as in the past or purely as the theory says. So nowadays, because the inflation has climbed a lot, this is the inflation, we see that the Fisher theory is not doing as what we expect. So the interest rates generally, due to this theory, when we observe an increase of inflation, we usually saw in the market an increase of nominal interest rates. Okay, so the real interest rates that was equal to nominal interest rates minus inflation always gets more or less constant or in the same value. So if we observe inflation, we observe increases in the nominal interest rate. But in this short-term economical situation, we are seeing that it is true that inflation is increasing and also the nominal interest rates, but the increase of inflation is bigger than the increase of nominal rates. So this is affecting, and the way the central banks are managing this situation is affecting also to the cross like euro dollar. Okay, the last part of my video is to remember that to invest in stock markets, in markets, you should know yourself. It is a short phrase, but it is the main thing you know to be to have succeed and make profits on any investment you have. Okay, to know yourself in finance is to know exactly your temporal horizon of investment. As if you remember, the stocks, the plots, it was not the same 1 month, that 6 months, that 10 years. Okay, and this fractal is very important to your needs. So first of all, define your temporal horizon, and then you have to know really your risk aversion. Are you a conservative investor or a risk lover investor? Okay, are you able to endure a 50% loss for years without losing sleep? If you can select your properly your temporal horizon, your risk aversion, and you will not lose your sleep, then you're ready. Okay, remember that economists are good in trends, especially in long-term trends, and for short term we need psychology and the stats, and also study the markets. Okay, now we will make more investment studies to help you to get the price market move. If you like the video, please subscribe and help me.